It's a pleasure to be here today. For billions of people throughout the world, Canada stands as a symbol of hope and opportunity. However, we cannot afford to take our prosperity for granted. Every day, the businesses that drive our economy are making hard decisions about how to preserve jobs or create new ones, whether to invest here or abroad, and how to respond to competition that grows more intense by the day. The decisions they make determine the future of our communities and our country. Canadian businesses are making these decisions in an economy that recently hit a soft patch. While job growth has been strong, we can do better. The Canadian economy has been at a standstill since October 2018, with almost no growth over this period. Business investment fell 2.9% in the last quarter of 2018. In the first quarter of this year, Canada recorded its largest quarterly trade deficit in almost 3 years. Recently, the Bank of Canada marked down its growth forecast for 2019 to 1.2% real GDP, a far cry from the 3% growth we saw only 2 years ago. While some of the causes of this anemic growth are out of the government's control, we do control tax policy, and Canadian businesses are pleased to see the implementation of targeted accelerated capital cost allowance measures in this budget bill. These measures will help promote Canadian business investment, particularly in a manufacturing sector that was recently grappling with the impact of the illegal and illegitimate tariffs imposed by the US on Canadian steel and aluminum. In fact, we may already be seeing the positive impact of these accelerated capital cost allowance measures, as machinery and equipment investment is up 8.7% in the first quarter of 2019. Canadian businesses also welcome the elimination of the income threshold to access the enhanced 35% refundable scientific research and experimental development tax credit. According to the World Economic Forum, Canada ranks 23rd in the world when it comes to R&D expenditures. The SR&ED measures announced in this budget bill should help accelerate small and medium-sized business innovation and allow these companies to scale up at a faster pace. While these measures are helpful in the short term, the Canadian business community does not think they go far enough to resolve our competitiveness issues. These tax write-offs can be more broad-based to provide targeted support to other sectors of our economy, such as our struggling natural resources industries. And these measures do not address the need for a comprehensive review of our cumbersome and uncompetitive tax system. Last fall, our 450 local chambers of commerce overwhelmingly supported a policy resolution asking for a tax review. In October, the Senate Committee on Banking, Trade and Commerce recommended that Canada should reassess its tax system through a royal commission. Canadian businesses speak with one voice on this issue and are still waiting for government action. Compounding the challenges created by our tax system are the federal debt and deficit. This budget implementation bill does not include a federal plan to put an end to Ottawa's deficit. Canadian businesses are calling on the government to present concrete plans with firm deadlines for returning the federal books to balance. It is simply irresponsible for our generation to continue to spend and send the bill to our kids. While the Canadian Chamber welcomed the announcements to improve our regulatory system in the fall economic update and this year's federal budget, we are concerned about the slow movement and progress in setting up these instruments. Unfortunately, our system is broken. It is complex, unclear, and unpredictable. And the overlap of regulations across different levels of government is stifling investment and preventing us from getting our natural resources to global markets. This is not just a sectoral or a regional issue. Every single Canadian has a stake in making sure that we don't continue to be a nation of builders that can't get anything built. The tax measures that address competitiveness in this bill are a positive first step, but they fall short of what is needed. Without a thriving business sector, Canada's economic growth suffers, our prosperity declines, and our governments lack the resources to build our roads, hospitals, and schools, and also provide social services. In short, for Canada to succeed, our businesses must also be successful. There is a lot more work to be done. Thank you for the opportunity to meet